What if you could sell your assets back home, move back to the UK, and owe HMRC nothing on the gains? Sounds unlikely, but it's a real planning window, and it comes down to timing. The difference between pulling it off and paying a six-figure tax bill. Just a few dates on the calendar. Meet Mark. He is a Kiwi, living in London and planning to stay. But back in New Zealand, he's sitting on serious gains. Property that's doubled. Funds that have performed and a super balance built over decades. Sell now as a UK tax resident. HMRC takes a slice of all of it, and not a small one. Between property gains and funds taxed at income rates, that bill can easily hit six figures. But here's where it gets interesting. In the UK, it's not just what you sell. It's where you are when you sell it. Sell while UK resident. Taxed. Sell while non-resident. Generally, not taxed by the UK at all. So the strategy's simple. Leave the UK. Become non-resident. Sell your assets. Come back later. But this only works if you get two things exactly right. First, timing your exit. The UK tax year runs from the 6th of April to the 5th of April. You need to be non-resident for a full tax year. Leave at the wrong time, say October, and you've burnt that tax year. Leave just before the 5th of April, now you've got a clean tax year ahead of you. Second, timing the sale. Even if you leave in March, don't sell in March. Wait until after the 6th of April, when the new tax year starts and you're non-resident from day one. That's when the gains fall outside the UK tax net. But there's a catch, and this is the rule that decides whether the strategy works for you. The temporary non-residence rule. If you've been UK resident for 4 of the last 7 tax years, and you come back within 5 years, HMRC can pull those gains right back, as if you never left. Fail either test, and the rule doesn't apply. So who does this actually work for? Take Mark. A couple of years in the UK, well under the 4-year mark. He can leave just before April, stay out for 1 full tax year, sell during that window, and come back clean. No UK tax on those gains. And where this really bites, assets with big gains or harsh UK tax treatment, especially offshore funds where the UK taxes the gains as income. Of course, this isn't for everyone. If you can't spend a year outside the UK, it doesn't work. If you've already been here 4 or more of the last 7 tax years, it also doesn't work, unless you're willing to stay away for over 5 years, which for most people is a life decision, not a tax one. So this isn't a loophole you stumble into. It's a window. For the right person at the right time, it can mean stepping outside the UK tax system just long enough to lock in years of gains before stepping straight back in like nothing happened. Not sure if this applies to you? That's exactly the kind of planning we do at No Worries. Get in touch before you make a move.